go, money miners. A bit of bloody green on screen. Mate, we've had a lithium rebound, a bit of uranium's going off. Mate, I can feel bloody Greatland's bloody getting tougher. Like, it's all starting to go. And everyone wants to know what the catalyst is. The catalyst was Axis Mining Technologies' exponential growth. That was the catalyst that's given everything else growth. If Axis are growing, the mining industry is growing, the stock market's growing, everyone's money is growing. The trusted advisor. Thanks for making everyone money. Axis.
Get in while you still can.
Oh, mate. Jesus Christ. Stewards of capital.
I'm grateful you're doing ads, Matty. The episode that we'll be uploading tomorrow, interview with the Shrub, we JD and I had to carry the team with ads. And
A for effort, though.
It was we don't do it the same. We'll put it that way.
It's good.
We still love them dearly, though.
It's the easiest thing for me. So it all works. Right. We're going to lead out. Boys, you've done a bit of bloody digging on this. What's come out of the lithium market and why we've seen some double-digit percentages increase yesterday and today a bit as well in the lithium sector, which is great for all the ones that are struggling in that sector.
Yeah,
good on them.
The info is as transparent as you'd expect out of China. It's great.
Of course. Yep. I got the, so we're going to, because we didn't have the show yesterday, the initial stuff come out about Greatland, acquiring Telfer with the big bloody 500-odd page doc, which, like, I'm the worst person to read something like that, but I picked a couple of things out, probably missed shitloads. So I'll go into just a bit more detail of this, what this Telfer acquisition means comparably as well. What else we got? We got anything else?
Very curious.
I better open the fucking
IGO
show
Strategy
notes.
Day. So this is I tuned into this and I read the doc and let's see if IGO's identity crisis is solved or if it's still apparent. I'll tell you later.
Oh, very good. Old Ivan is thriving. Is
Trying to fry time.
Oh, very good. Right. Let's let GC. What do you got?
I got a few surprise tidbits at the end, just around the grounds from this week.
Oh, I love it. You're always a good end-of-week injection of
End-of-week
LGC.
injection. That's
Righto.
it.
JD, leader out, mate. CATL reportedly cuts some lepidolite out of the market.
So it looks like there's real cracks in the lithium sort of supply out there starting to emerge. Your sort of air quote marks on reportedly. We'll kind of get into that in a little bit about how the news kind of surfaced. It was, as I kind of said, fashionably transparent from China with a bit of digging from some investment banks, and then before we knew it, every lithium name is up 10+%. In China, Ganfeng and Tianqi, they were up limit 10%. I think Albemarle up 14-odd%. So it was a sea of green, which was actually, a bit of welcome relief, I dare say, for a lot of the lithium companies and investors out there, unless you're, of course, on the short side, which a fair few people are.
There's a few of them. I think Mr. Alex Turnbull picked it very timely. I think his comments in the potty were specifically around this happening soon. So he was on the money there, I think.
Yeah, I think he said if the lepidolite was curtailed, maybe prices would respond pretty promptly.
Yeah, I think he was saying, like, look, it was alluding to the fact it just didn't make sense that it was still going, which was pretty obvious, and this might be the first sign of it.
Mate, you could see it on the spark chart too. Look at all, like, pretty much every ASX lithium producer up, except for Core and Sayona. Last place, Core.
Yeah, you can see on that sort of...
Core's a uranium miner now.
It's all changed. So to give a quick overview of how yesterday morning kind of transpired, essentially start seeing these rumours that CATL will be suspending lepidolite mining operations as well as production. And then, these rumours start swirling around. You have investment banks, UBS, namely, coming up with a note. They called the bottom. They said, this is the bottom of China lithium. So... following on from that, you have Citi and a couple other brokers kind of reporting along similar kind of lines. You have fund managers saying, this is a clear short covering reaction that we're seeing in the market. To give a couple of the snippets of wording that you see, UBS said, according to channel checks, CATL has suspended operations. Obviously not confirmed as of yet by the company at that point in time.
Channel checks means WeChat?
I dare say.
Was it Bloomberg Newswire?
That was later. So
that came later.
Came
as
later.
well.
Yes, then
It did get there though.
and then
shitloads on WhatsApp.
You see a CATL spokesperson confirming that they will make adjustments to lithium carbonate production. So again, no definitive wording. There's one of the rumors was that one of 3 lithium carbonate production trains would be switched off, but by 24 hours later, it's kind of the consensus view that they are shutting this thing off. So
the whole thing.
Well, this mine, you'll kind of see it referred to as Jiangxi or Yinchuan, in a sort of in China that feeds into the downstream battery facilities that CATL obviously has their core business wrapped around. So there'd been a lot of estimates in the past, and again, these are all quite rough numbers, but there had been estimates about what the actual operating costs might be for this Yinchuan lepidolite mine, and the view that UBS put forward was that the cash costs were just under US 11,000 tonnes before VAT, and afterwards US 12,500 tonnes. Now
for lithium carbonate.
Equivalent.
Yeah, so
that's
not
right.
not a spod ton, which is so.
Yeah,
this is what 5. Oh, it's like 10 times the price, isn't it? 10 and a bit times the price.
At the moment, it's over 10 and a bit times the price. Yeah. So the price we've been seeing lately is sort of circa $750 for spodumene 6%.
Yeah.
I think YJ had his estimate for him between 13 and 14,000 a ton as well.
Yeah, I mean this is a cash cost as well. Now everyone's going to sort of put forward the argument that perhaps they don't necessarily need to make a margin on this. They're an integrated battery maker. That is the view. UBS again highlighted that they'd clearly been losing money on this part of the integration for a good few months now, and that's been widely suspected or known across the market. There's a few interesting investment banks and people on Twitter out there that put up cost curves of Chinese lepidolite. We'll flash up a chart in a moment so you can kind of see that. But I guess a lot of the bullishness comes from people anticipating that this is a sign that maybe we're going to see a bit more of it. Who's to know? I mean, you can see also in the Chinese futures, the GFEX, which was, again, pretty widely quoted yesterday, they jumped up 8%. I mean, they're not exactly oil futures, they're not as liquid, but that's the kind of most liquid gauge you've got of prices looking forward at these were like the November futures that I'm kind of quoting here. So,
Jody, how much actual lithium does this represent? Does it matter, or is it more of a sentiment thing, or is it actual quite a chunky amount of tons?
That's a great question, Ali. And again, it was not the most straightforward to kind of find the numbers. So again, referencing a couple of the investment banks, they'd sort of put forward that this was 60,000 tonnes of lithium carbonate equivalent in 2024 expected, going to 95,000 next year. In spod terms, that is roughly 400,000 2024, going up to roughly 650,000. So pretty chunky, but it's one decent sized.
Yeah, so it's like shutting off most of Pilgangoora.
Yeah,
at the moment.
Even more than that, it's like it's a regime change. You know what I mean? It's like up until this point, seemingly China was just subsidising loss-making activity ad infinitum for strategic reasons. But this is like a regime change. So
it's the read through, right?
Exactly. Yeah. It's like that amount of tons for this project. But what about the other projects that are also uneconomic? Are they to come?
And I'll get probably the other question as well, which you'll never get an answer for, is are they shutting this down because they've got adequate enough inventory to process and they don't need to mine, or are they going to need to buy it from somewhere else to supplement shutting this off?
That's a great point. So we'd seen across the visible inventories, which is obviously, again, a big question mark about how much you're actually sort of seeing at every stage. But the visible inventories was a sort of level that had been rising steadily throughout the year. In the past few weeks or so, it had destocked a little bit. But if you're a lithium bull, you firmly want to see that destocking trend continue for a good while to come, because those inventory levels are still, you'd say far too high. So that's something, the shorts and the people out there that are long are going to be pretty keen to keep their eyes on and, to give them confirmation one way or the other.
Need some of these Chinese companies to go PA in the Aussie lithium stocks. Give them an incentive.
Absolutely. I mean, talking of the Aussie lithium stocks, we'll chuck up a chart here quickly. You can see the short interest in a lot of the names out there. So no surprise, it's been the case for quite a while now. We've spoken about it a bunch, but Pilbara, Liontown, Sayona, Mins are all amongst the most shorted stocks on the ASX, not just the mining space. And I mean, the number on Pilbara still kind of blows your mind. It has been inching back somewhat from 22 and a bit % of the issued capital to 20-ish%. But, as a quick reminder, we'll only find out in a few days' time what's actually happened if this was indeed the short covering event that a lot of people out there suspected it to be. Yeah,
and Mins is an interesting one because they've gone from like 30 to back to $38 in a couple of days, and it'd be interesting to see because they had they released the announcement on the same day that this happened about the cost cuts and the roster changes and capex reductions and everything. So it'd be interesting to see how much of that rise was attributed to this because they're obviously got a lot of talk to the lithium price, being considering Mount Marion and Bald Hill and everything. How much was attributed to this and how much the actual operational cost. So big rebound from last week.
100%. It'd been one-way traffic for quite a while, and things don't happen in a straight line. But I think the kind of point to round out on and go back to your question, Ali, one of the numbers that was quoted quite a bit was that this was sort of 8% of Chinese supply. So talking about 5,000 to 6,000 tonnes of lithium carbonate equivalent per month. Yeah. At the moment, obviously it was changing as it was sort of suspected to get bigger. I'd seen some people quote more, some people quote less, but it's really the read-through that everyone was getting really up and about thinking, is this the bottom? Has it kind of set in? Where can we kind of see it going from here? There's a widely circulated city note, I think last week, that said only one operation is making money at current prices. So, I mean, I'm hoping for a lot of the names out there that, the low is kind of set in because it was really starting to hurt across a lot of the companies on the ASX that we talk about and kind of want to see do well.
Yeah, I think like expectations of price, like price isn't going to rebound in a straight line either and just like go to the moon again. It's like, it's going to find a
I mean, we saw that
happy medium at a much lower rate than some people might have expected to.
Yeah, we saw it get to 800 spot, that is, and then up to 1,200 in early 2024 and then all the way back down to 700. Nothing happens in a straight line, but the cost curve, which is pretty opaque, is the best guide to where things are going to be in the medium to longer term. Because
there hasn't been a reported increase in the traded spodumene price yet. I remember that like the UBS thing, I think the Gen or whatever it was, that price went up, but everything was flat on the note I read this morning. So this is obviously all a bit of a sentiment-driven equity rally.
Yeah, I mean, the best gauge on the price we had was the futures, right? The actual spot price is a spot market that's made up of a couple trades a week, a month or something like that. So let's just, again, zoom out a bit and look and see what it's in a few weeks' time to get a bit of a better feel for what this actually means for the price.
Isn't it funny how the influence that the shittest form of lithium can have on a market?
No.
Well, that's cost curves for you, right?
Yeah.
Because it's the floor of the cost curve you set at the margin, which is the amount of high cost that still gets sold. Yeah.
But no, it's fascinating, because this is, I mean, like we were sort of saying before, everyone's spoken quite, at lengths about, how this lepidolite production is not sustainable. But, this is the first real and material thing we've seen as far as that getting pulled back and not just speculation. So I think that read through, which has certainly showed itself in the equities, lithium equities, is fascinating.
I find it wild. A lot of these brokers putting forward, 2 to 3 month price targets. Like that's just kind of crazy.
What does that even mean?
That is so hard to pick. People that are closer to the market than anyone else in the world are saying, "I never thought we'd get down here." I know it's their job, but you kind of put yourself out there a bit.
Just drag right, chuck a number on it. I don't think it might be simpler than we think.
Maybe.
It just needs to be a bit higher.
Yeah.
Just to get that corporate work in. It's a pretty easy formula.
Speaking of corporate work, Matty, there's a big deal.
Oh, mate. So we alluded to it the other day, the Greatland Newmont Telfer bloody Averon deal. So we've got I don't know if that doc was out. I think it came out yesterday, wasn't it?
Yeah, we didn't have any details.
I was trying to read it on the couch when I was dying of throat infection. I'm like, oh, this is just not good for trying to remedy myself. But hey, I was trying to for the money miners and the Greatland Gold fans. So summarise quickly. I know we went through it the other day. Greatland picking up 70% of Havieron, the remaining 70%, 100% of Telfer and all the associated infrastructure, plus the Newmont JVs, the Antipa stake, the Travis tungsten mine.
Clearly the highest value part of that.
That is huge, mate. Hey, never underestimate. Look at what Antimony's doing. So, look, and this is for approximately $750 million Aussie, and that includes the deferred consideration, likely which I'll go through, some stockpile and processing adjustments between now and the acquisition. So, because Newmont are going to start processing again end of this month, start of October, but agree to only process on one train. So around 10 million tonne.
Is that from October when they
start? Yeah.
Okay.
So between Newmont owning it still and the completion of the acquisition, Newmont will process on one train instead of two. So about 10 million tonne run rate per annum. So, and there also have been and will continue to mine, and which will be increasing the stockpiles. So to, I guess, compensate Newmont for this, there's some conditions that Greatland have to pay, like there'll be the cash cost adjustments.
Yeah.
So it's $10 a tonne for every bit, effectively how I understand it, $10 a tonne for every bit of ore over 6 million tonne in ROM stockpiles until the acquisition completes, and then another $20 to $25 a tonne based on what Newmont would have processed if they were running the two trains. So when they combine all that, they've got to pay another $40 million within 180 days acquisition. And then if there's anything on top of that, based on what they process and what they could have processed, that's due in 366 days after the acquisition. Gotcha. So all pretty.
Should we think of it as about 800?
Yeah. That 750 sort of includes that. Okay. I think because it was like 476 US times bloody 1.5. Yeah. So it's around 750. And let's put $750 million. And as I said, I think it's only, what is it, 300 mil Aussie up front. It was, what was it, 205 US up front.
Yeah, 300
mil Aussie up front. But let's put the total, including deferred consideration and these possible adjustments, 750 mil Aussie in context. That's half of Spartan's market cap.
Yeah. When you say the upfront as well, with the dilution.
There's upfront cash, but there's script.
Upfront cash and the script. Yeah. So 750 mil Aussie, half of Spartan's market cap. Spartan's at 1.5. Orabanda is a $1 billion company. This is without any takeover premiums if they did get acquired. So for that 750 million, they're holding the keys to a bit over 20 million tonne processing plant, massive underground mine with the existing infrastructure to piggyback off.
Long mine life.
All the exploration tenure, bitumen airstrip, 1,700 man camp, 145 megawatts of power, 30 million tonne of stockpiles. So when you put it in that context, what they're paying for it and the deferred consideration and everything, it's a bit of a cracker. And this is what happens when you get it out of a major, because the major's it's not really hugely material for them, that cash, like for Newmont, because they're so big, but
they wanted the portfolio simplification and
and like getting it off their hands, mean they can redeploy people elsewhere. They don't have to worry about a non-core asset anymore. And they've obviously kept it going because of their social obligation to keep the workforce there and keep it going. So it's getting it off their hands, even though if they're an extra fucking 300 mil for Newmont wouldn't even move the needle for them, really. They're freaking huge. This is obviously a first step. Lot to go, towards it, to getting this all humming, because it's friggin' big. This is a big operation. So won't go over the financials too much. As you said, there's 250 mil Aussie of Greatland script to Newmont, and then Wyloo actually have an option agreement for some end the remainder of that Newmont scrip, because Wyloo are tipping in $100 million US to the raise to maintain their pro rata. And so that $250 million, half of it, Wyloo have an option to purchase at a 50% premium to the placement price. And then they also have a right of first refusal to purchase the remainder of it should Newmont choose to divest it. And so I think it's in escrow for 12 months.
Yep.
And then 12 months after that, there's like some market conditions, which is effectively meaning they can't dump it on the market. They probably have to block trade it or something. Should Newmont want to get rid of it, but Wyloo do have the option. So it's like it protects them from Newmont dumping that stake. I don't think it's a Newmont thing to do to go and just dump a stake and fucking drive a share price down. So, and then they've also got potentially, like non-binding at the moment, like $750 worth of bank debt from HSBC, ANZ and ING. Tembo Capital also tipping in $75 worth in addition to Wyloo's bit. So
they're probably just, like you could bet it to Spartan then. They're like, they just made heaps of money on Spartan. They're like, oh
let's do
this is better value.
let's do that again.
Do it again.
I think, Emma, what they tip in the Spartan originally?
They bought in at 10 cents. And I don't know what they put in, but they got a royalty out of it.
A lot less than $75, wasn't it?
Yeah, definitely.
Yeah. This is a bit of a bigger swing for them. 18%
or something like that.
Yeah.
And then the listing, what sort of guidance do they give about that?
They pretty much said within 6 months after the acquisition is when they'll be looking to list on the ASX and have a dual listing on the AIM still. So I think as you said the other day, trying to do the listing with the transaction obviously complicates the living fuck out of it. So I think they're just staging that to do down the road. So Jesus Christ, we've bloody maxed out the OneDrive folder with screenshots for this. I'm bloody flying.
The stock got hammered.
Did it?
I mean, they did the raise at a 30% discount.
Yeah.
But
down 27%.
Oh, it's just right. Yeah.
Still above the issue price.
Still above. Now, in terms of what they've got in front of them, so when you read through, potentially close to 10 million tonne of ROM run-of-mine stockpiles by October. That's essentially what they've been mining and adding and what they're going to add, Newmont, while they're still operating it. But then you add in these aren't classified, but not like CIA classified, like JORC classified. There's another 20 million tonne of low-grade stockpiles that are sitting there as well. So and I'm not sure if some of them are from the dump leach or like they're actual just low-grade stockpiles, but they're not part of the actual resource. So they've pretty much
got an expiration target or something over them. Like
no, but I think it's included within when they talk about. I'll bring up the screenshot. You got the exploration target, then the low-grade stockpiles, which aren't classified as inferred or anything. So there's 30 million tonnes sitting there. So this will see them. They've got this 15-month plan to pretty much pump 22 million tonne of that through the plant, and I would assume they'd be using the dual trains for that. And so that'll give them 374,000 ounces of gold and 13,000 tonne of copper. 60% of that is going to be hedged, it says, but not sure on what the hedging terms are. So I'm not sure if that hedging's part of the agreement or not. So like that's early cash flow for them. I would assume that they would want to maintain. They wouldn't rip the whole thing because a plant that big, you want a big stockpile buffer, and then you want to try and maintain it in some way. So, but yeah, it's like fucking scrolling.
It's just the headline kind of, when you think of what they've actually picked up for $750 million in the current valuation environment for WA kind of projects is, it screens a pretty damn good deal. Just considering what you pay for a friggin' 150,000 ounce producer that probably isn't even developed yet. You normally don't get a bargain in a sale process, but I think to your point, it's a function of A, like buying from a major, but it's B, the negotiating leverage from the right of last refusal.
That was, and whether they want to say that was or not, but that was
it's massive because it makes you the preferred party for Newmont the entire way, as opposed to them creating competitive attention in the sale process and then You're having to exercise that right at some crazy price, and it's just, it just works. It was whoever put that clause in that JV agreement, give yourself a free bonus.
I don't think it can be understated as well as the value of that processing infrastructure and holding the keys holding the keys to basically the only major processing infrastructure in that region. You essentially can you control your own destiny, and everyone else sort of has to work in with you, right? That's pretty powerful.
Oh, it's, and I don't think stepping back to when we previously talked about Greatland, from memory, like I'm just trying to think of the sentiment. The idea of this happening felt far-reached. Like when we talked about it, like it was like how Greatland is going to be able to get Telfer and everything, and they've done it. Like I'm pretty sure, thinking back, it was always like that's someone bigger has to come in to take Greatland and that asset, but they've done it themselves. I think it was pretty far fetched at the time.
The moment I learned about that right, I was like, oh, here we go.
Yeah, it's bloody impressive. So in terms of Havieron so far, where that's sitting, so because they've done a lot of work so far in the Newcrest days, because they've developed the decline through the two aquifers in this Permian cover, which is I don't know, Latin for dog shit, just friggin' dust that's been come over. So I think it's one of the most expensive declines in history, road-headed and probably a gutload of shotcrete and everything. It's they've got through two of them, but it's on pause at the moment because they're waiting for the permits to put extra evaporation ponds up the top to deal with the water that's going to come out of this aquifer, and then obviously got to do looks like they're doing work to depressurize and try and minimise the pressure coming out of that aquifer. Like when you talk about aquifers, it's just fucking water that goes forever. You just can't.
Yeah.
I don't know the hydrology of it, but hydrogeology or whatever, but it's not something you can usually just pump out. You just got to try and block it off. But I might be proven wrong, but they might be able to continually pump it out and monitor it to depressurize it and everything. So there's a bit of work.
That's how they make it sound, right?
Yeah, and like you look at this thing, the next big challenge will be the two ventilation raisers that have to go in because they're talking pretty much they can't do a big, large diameter raise bore because one, you got to go through the aquifer, and two, the ground's that pus, it just wouldn't hold up. So they've got to blind sink those two, which means like developing vertically down from the surface like a proper shaft sink without a void. And then I'd say they would have to support it the whole way down, like spray it and whatever they got to do to support it on the way down, then manage the water out of the aquifer. I think that's going to be a bit of a challenge to get through that. But I guess what's in their favour is because that decline's been done already, they've been through two aquifers, they would have learned a fuckload going. Would have been an absolute head fuck when you first hit it, but you realise what works and what doesn't. So I think that knowledge is going to be pretty bloody important. It'll be, she ain't like it ain't like chucking up 3 sheets of mesh at Jundee, put it that way. It's bloody, it'll be pretty challenging. So probably going to be a pretty slow and costly process. So, and I'll be, the big thing will be managing the water because water just fucks everything. So getting the pumping right, getting the depressurising right. So they put this in the chat group. Greatland better have Greenland's equipment on it. Like this, like if you want to control this aquifer, bloody, and chuck these water ponds in, I would feel so comfortable knowing that Greenland's is up in the Patterson sorting this out. So, buddy, all the UK boys, start a separate thread in the chat group. Get Greenland's equipment at Havieron. It is a must. I just don't know who else you'd get.
Greatland, Greenland, same thing.
Greatland, Greenland's, it's exactly the same. Could be a subsidiary that we don't. It could be a related party. So
a match made in heaven.
Yeah. So I want to see Greenland's up there.
Yeah.
So give them a shout. They're in the show notes. Shawnee.
Yeah.
Give them an email.
Nice work, Matty.
Do the right thing. So
I reckon the hard work's still ahead for them, right? Because you got to be a miner now, and it's not straightforward to just.
Oh, but you do. You got a lot of workforce coming in. Like they'll be retaining all the.
Yeah.
obviously the burn cut people that were in the contract, then the Newmont people in the white collar side of things, so and all the processing people. So I assume there's going to be a shirt swap there. So that's probably pretty bloody handy. Burn cut have been up there for 20 years, I think, long time. So a lot of knowledge of Telfer. And then they've obviously been doing the decline at Havieron as well. So it's a lot of options, but with how big that processing plan is and the processing flexibility based on thinking down the road of, talking about JVs and other dirt coming in as this central facility. So because looks like Havieron and probably Telfer as well going to be predominantly a gold mine with copper. But if they've got more copper coming through, like a more copper predominant deposit going in, like they can change, from what I understand, they can change a lot in the processing circuit of how they deal with it. Like I think of recent times they've been doing just like they just grind it, chuck it in, float it, and they have a gold copper concentrate, or they can and change up the chemicals. They can do like a copper concentrate that has a bit of gold in it. Then they can, which I think they're proposing to do here. Then they have a gold float that then goes through a regrind, which they're going to put in and then a CIL circuit to produce the doré bars, and they had that dump leach up there, which is effectively a low grade heap leach. Like they can flick things around and based on the mineralogy to produce a lot of different things. Because notoriously it's pretty much the copper concentrate produced at Telfer is about half of the grade of copper of what they produce at like ADIA, and that normally a copper con's like 25% copper, but this stuff's like 12% or something. Like it's higher pyrite, but because they've got the elevated levels of gold, the smelters fucking love it because they've got the gold in it to sweeten it, even though it's a lower copper grade. So
get the mets in there.
Yeah. So it's pretty exciting, I think, and obviously that exploration potential of the tenure. Like you can see here, you've got that West Dome Deets and this VSC, which is below the cave, but regionally within that Telfer tenement, start peppering that, like what else you can find. Down deep there, the stuff they've got, like your biggest thing at Telfer and Havieron as well, because they're going to have a refrigeration plant at Havieron, is the heat. Like you're up in the fucking up near Marble Bar, one of the hottest parts of Australia, and the depth around that cave, a lot of seismicity to deal with. So it's not an easy walk up start, and then when we talk refrigeration, when you have refrigeration is evaporative, the one they got up there, to my knowledge. So when a cyclone comes over and it's humid up top, you know how an evaporative aircon goes in your house? Yeah. Good for fuck all. Yeah. So it's there's had a couple of dark days at Telfer there, put it that way. So but then though down deep there, they're not trucking it all the way out from 1.2 Ks. They got the freaking shaft infrastructure that already there that goes down to 1K deep. And that can I think that when that was humming, that could freaking put through 20,000 tonne a day or something. You wouldn't be able to get the trucks there quick enough now probably because it used to just come out all passes. But like that Western Dome Deeps, they'll just truck that sort of laterally over there, truck it over the haulage shaft, just throw it up the shaft. So you're not trucking, it's not diesel trucks driving bloody Gwalia distances or anything. It's just all that shaft infrastructure and putting a shaft in. Like, you know, they talk whether they could do it at Havieron or not. It's a fucking huge excavation, a lot of capital. You've got to put an underground crusher in. But in terms of what they can find in and around Telfer, that shaft's still there. So it's worth its bloody weight in gold. So it's, a lot of potential. So bloody excited to follow this one. Underground. Fuck, I love underground.
Well done. Masterclass, Matty.
Oh, fucking.
Watch out for that listing next year.
Yeah.
I'm keen to talk about IGO.
Oh,
yeah,
strategy day.
Yeah, we finally got to their very anticipated strategy day. I say much anticipated because IGO's taken a bit of a necessary reinvention at the moment. Like once upon a time, they're basically the most active miner from a deal perspective on the ASX for a brief period there in 2022. Peter Bradford unfortunately passed away. Ivan Vella was hired, but I don't think he took his seat until it was like December 2023. There was kind of a big wait for him to kind of get in the new head seat. And look, since then, the nickel market has collapsed. The Western areas, acquisition has been proven to be just a doozy. The lithium market has been under tremendous pressure, and that's placed the inadequacies of their joint venture with Tianqi kind of front and centre. The Kwinana hydroxide facility is still only producing at a fraction of what nameplate's supposed to be doing. Nova's mine life is fast coming to an end, and there's kind of increasing pressure on IGO's return on exploration over a long period of time. So the market's been kind of eager.
Has there been a return at all?
They actually, you know what? In the annual report they put out, there was like the back pages or something. There was a bit of a lithium discovery at Frostania.
Ah, right.
Yeah, not like heaps to talk about yet. But
yeah.
It might be the first discovery that they've had.
Fucking base metals. God, the worst thing to try and find.
Yeah.
Fuck that. If it was gold, they would have found something.
Yeah.
Anyway.
So yeah, look, and I think the market's been pretty eager just to understand what IGO is as a company right now, and IGO, they kind of brought some time in answering this question properly by saying, wait until the strategy day. Hence, we in the market have been pretty interested. I read through the 55-page deck and I listened to the webcast that they did as well. And and to be completely honest, there wasn't a hell of a lot there that was new. I suspect the market will still have kind of the same concerns that it's been having. But in a nutshell, if I were to sort of summarise everything that's kind of gone on and been told in this strategy update, they remain hitched to battery metals, unsurprisingly. So hence, super keen on acquiring copper. They even said they'd go overseas to do it, recognising that you got to go where the ore bodies are, sort of thing. And they even said they'd be like a minority shareholder just to get an equity interest in a project, as opposed to actually have to acquire something 100% as well. Lithium, a mainstay. I'll address the key issues around their lithium portfolio shortly. And look, on the nickel front, they're pumping kind of cash from Nova as fast as they can. They're trying to bring forward some of the tons from the tail a bit forward in the next 2 years. Cosmos was interesting. They kind of would admit that unless there's a different mining method, it's just uneconomic.
Yeah, because it was all stoping and paste fill and bloody at depth. Yeah, don't know how else you could. Be tough to start a ultramafic cave from down there. Not sure. Yeah, I think I suppose they've taken that first step to sort of identity wise with looking to flog Forestania off to Medallion, whether the same thing will happen with Nova, like actually starting to divest some of that nickel and
some of the infrastructure.
Yeah, so like Cosmos, don't know what'll happen with bloody that one. Yeah, so it's like in terms of that ultramafic depth, I guess the only good thing I see about it is it's good for Derek Hurd and DSI. Like heaps of invoices.
Yeah.
Like that's bloody spot on for that's a bloody that's a DSI staple, ultramafic. It's like you want bolts, you want mesh, you're gonna need a shitload of them. You give me a call, I'll keep the ground up for you. That should be the DSI thing that should be the website banner. We'll keep the ground up for you. YA. Yeah. Chuck it on there. We'll keep the ground up for you. DSI. I should do radio ads. That'd be the go.
Maybe that's a mining method that IGO could explore, is just way more ground support than anticipated.
I don't think that when he said uneconomic, I think that's to do with how much fucking ground support has to go in. Yeah. But I think, and that was the thing about Cosmos, like I think that was literally needing a frickin' $16 a pound price, because it wasn't a knockout grades or anything, ended over a kilometre depth and a lot of managing the stress and everything, and then they even struggled to finish the shaft. It needed that's when everyone was talking about nickel going to frickin' $12-16 a pound and all that, which it didn't, unfortunately, but it could. Who knows? Look at lithium. It could be the return of lithium. We might see the return of nickel. You just never know what is going to fuck up around the world.
What else did they sort of say about the the exploration package. There's been a lot of talk about the rationalisation. There's been a bit of a write-off of the portfolio.
This is a big talking point, right? Because I think IGO is a bit of a punching bag when it comes to just their lack of exploration success. You might say, and if you for context on like why the market has been critical. Look at what they're sort of spending in this area on FY24 numbers. So the year just gone, exploration and evaluation expenditure was 94 million. Corporate costs on top of that were another 63 million. So between exploration and corporate, there's 150 million bucks in FY24 going out the door. Arguably that like hasn't actually been getting a return for shareholders. IGO is saying that what they're going to do is have exploration expenditure taper to beneath $50 million in FY26. And like it's a pretty vast exploration portfolio. You can kind of see there, right? But it's this slide I want to draw your attention to though, because I think it could be contentious, right? They sort of explain and define what their new kind of exploration strategy is, and there's like a few things here. And I'm a student of exploration best practice, but I'm certainly no expert, and I've never worked in exploration properly. But I'm curious and trying to learn more about it. And like, so there's a few points here, right? The fail fast mindset. It's kind of interesting. I think when we talk about some of the issues in exploration, some of it is that people get wedded to projects and you're trying to substantiate your project's existence, and maybe the best method to do is actually, a much larger step out drilling program and actually see if this thing's got, sufficient kind of economics to even continue spending any more money, as opposed to doing, your short space step outs, which cost more money. And then you spend all this money and realize it was not really meaningful enough for us to do any work on in the first place.
It's fascinating because...
Sorry, it's just like, you look at these deposits, but it's so hard to pinpoint them sometimes. Like DeGrussa wasn't a fucking huge ore body. Like it's one of those ones where
the grade says this warrants it. So it's a trade-off,
but you could do big step out and drill either side of it, for instance. Yeah. Like it's just the success.
So, but the first hole where you hit it, the high grade says, I need a lower step out for this to warrant the economics.
Yeah, but you've got to hit it.
Exactly. Yeah.
So if you don't hit it, you could be drilling near a conductor, but you don't hit
it. These aren't like new principles. This is like, the people who are at the forefront of, how to be effective in exploration talk about this stuff. And it's something you see not done very much in the small end of town because people, it's much harder to separate yourself from a project, but big companies should be a bit more thoughtful about this sort of stuff.
I find it interesting. You mentioned that the people there, and a lot of people do point to IGO, they did for a long time at least, saying that they are an exemplar of good exploration. That was the narrative for a long time. Maybe more in the markets, they were a bit of punching bag, like you say, because there wasn't a return on it. But they were, spending a lot of money. They were getting out there and having a go. They had a very vast, portfolio of exploration projects. Unfortunately, obviously I can't comment on the exploration methods, but unfortunately it didn't bear real fruit.
I'm not sure if they turned much of their ground that they picked up a lot of ground, as you can see, but I don't know how much of it they turned. And there's like these cultural things on the inside of a company as well. Like, do you different exploration teams at these different projects? Are they competing for the same capital so that, or are they understand that they're all on the same team working for the same thing? All that stuff matters. But there's this thing I highlighted here, I think is a contentious point. So new external panel of experts to drive commercial discipline. External panel. So I think this is where there might be maybe a disconnect between like the people at the forefront of exploration and discoveries versus like the market's like desire for accountability on money spent, because like when you hear people tell the stories of exploration, there's always some degree of serendipity to them. There's like, it was because the kind of the people at the, on the ground, there was some intuition, some data, and they had the freedom and the flexibility to kind of pursue that enough, and there was enough trust in them. And there's this balance between kind of having the ability to pursue things in these like fruitful dynamic teams and go for them, but the moment you have this kind of like layer of bureaucracy kind of dictating things above, I think it'll that would be a bit of an alarm bell to a lot of explorationists out there too.
But also just the IP sitting external as far as amongst those exploration teams and how they go about things and their approaches, sort of dragging more and more out more and more of that externally, as rather than keeping that inside of IGO. And we sort of spoke about this with our chat with John Ronsky, I think, a few weeks ago. And there's so much like intangible benefits of that staying in the culture and in the team and in the company. So
there'll be a lot of lost IP that comes with reducing the size of your exploration team and all that sort of stuff. But there's a trade-off between that and like getting returns. And Ronsky, he actually talks about like what are the 4 factors you need to actually get a discovery. And so like I think it's just reorienting your exploration kind of works towards something that can actually get a return. And it's not easy in a big company. And I think part of it, they recognise that they're going to do more joint ventures where it's a smaller company that takes on the risk that's appropriate, and they'll do a JV and that sort of stuff. But to the more meaningful part of the equation for IGO, though, it's the lithium situationship right now. The market has a variety of questions here, and the answers I think were kind of flimsy. But I also think they're kind of snookered. I'll play a few of them for you guys, just to get a taste for it. So they kind of got asked about the cost competitiveness in downstream, and like the elephant in the room there being Kwinana, which is producing sort of seriously uncompetitively, and this is the response.
From the perspective of Kwinana, I guess it's a different value proposition, given the partnership with Tianqi and the amount of capital invested prior to IGO. And there is excellent capability that Tianqi is bringing to be able to fully ramp up Kwinana to its full capacity.
Yeah, so this was like a bit of a common theme amongst the the answers, really sort of highlighting what Tianqi is bringing to the table. If it was any other company that had a real vote or the ability to vote, would you continue pushing ahead with Kwinana, knowing it's just sort of chewing sort of capital at the moment? I think it was John Bishop who asked a question which kind of got to the crux of what I wanted asked.
The value of your partnership with Tianqi and TLEA and the expertise, both technically and commercially, that brings to the joint venture. I guess one of the criticisms of IGO or a pushback from the market has been that Chinese joint venture partnership in particular and your ability to influence within TLEA and certainly within Greenbushes. How do you think about demonstrating that to the market and demonstrating that you do have a voice?
Okay, maybe, Cameron and Brett, you're both close to that. Maybe share some of your reflections. And Cameron's brand new, just joined recently and has been through the agreements and has a fresh set of eyes on it. So,
yeah, I think with the joint venture agreement, there's plenty of scope. It is, effectively the vehicle for developing our lithium business. But there's plenty of scope within that to work, with Tianqi. And I think that's the real challenge, and we've got to build that over time. But there's certainly those mechanisms there to do that, and it's progressing with that from a commercial perspective. So I think the flexibility is there, and the alignment is there from what I've seen as well, which I think is really the practical point. Brett?
Yeah, I think, well, in terms of the joint venture, it is what it is. We work through the committees as they are. For me, probably the more important part, being new, is to build the relationships with the key counterparts on the other side of the joint venture board that I sit on, and how do we actually reach a common understanding of what we're trying to achieve through the joint venture itself. It's very clear that we want to grow in lithium with Tianqi, and this joint venture is our vehicle. So the relationships as well as the contractual underpinning are almost as important at this point as we build them together.
What do you make of that?
It is what it is.
It is. The only way they could get exposure to Greenbushes was a JV with these guys.
Yeah.
And that's the only way they can do anything else in lithium.
Yeah.
I love how they pass it to the new guys. Though.
Yeah. I think, you kind of summarised it perfectly. It's kind of obvious to everyone now that IGO is contractually bound to grow its lithium business within the confines of that TLEA joint venture. And within that joint venture, it appears from the outside like Tianqi effectively has the last say. That's how I interpret it. Like, for example, would IGO have sort of marched ahead with the loss-making at Kwinana in the same way that they kind of have done if they had the last say, or is Tianqi pulling them along? Because I get the impression Tianqi might be pulling them along on that one. Would they have been on board with this kind of supply curtailment from Greenbushes or was that which was this lowest cost kind of hard rock producer, or was that kind of a Tianqi decision? From the outside, it appears as though what Tianqi wants, kind of Tianqi gets, and IGO they skirt around it. Like you see it in that snip there. They speak to the mechanisms in the joint venture, but they don't name what those mechanisms are. Like, what are they? Are they committees that IGO representatives sit on where IGO has a voice but is outnumbered by vote? Is that the mechanism? I'd love them to be explicit on that front. It is what it is, like you guys said. It's a telling statement. And, repeatedly throughout the discussion, they do talk about the alignment that they have with their joint venture partner. Alignment, they use that word a lot, alignment. But it appears to be more complicated than that. Like, both parties want to make the most money, is what alignment is. But because Tianqi's done some sort of strange things in the past in this respect, I think it's just more complicated than that. It's maybe Tianqi does have different objectives at different times because they're just a different kind of company. So we all know it's a bad JV, but like you said, Matty, that was the price you had to pay to get an interest in the world's best hard rock lithium mine.
And it comes, like, I guess what happens, it is what it is when prices are low and Kwinana's struggling, but you'd put up with all of that because when you've seen what happens when it flies, it just comes pouring in, and that's where the fruit comes. So it is what it is till it's real good.
Yeah.
So
yeah. Anyway, I'll leave it at that.
Ah, very good, Trav. Lovely work, mate. Oh, good. Isn't it funny, the coincidental timing of a lot of this stuff and the exterior news? MinRes's announcement, bloody CATL announcement, IGO strategy day the day after. It's like they knew this shit was coming.
The Oracle.
Maybe. Righto. Ali GC, what's your Thursday injection for us, mate?
Oh, just to close off with a few tidbits from the week from me. So first one, Catalyst put out some production and cost guidance, I believe, for the first time during the week, saying 1 million ounce reserve allows Catalyst to double production for $31 million. So they're increasing their gold production from 100,000 ounces to 200,000 ounces over the next 3 years from 3 separate mine developments being Plutonic East, K2 and Trident. And they've also allocated $25 million to exploration in this current financial year as well. I won't go too much into the production and mining side, but I thought this was an interesting comment on the front page, and I'll just read the quote. Catalyst's existing infrastructure enables this production growth for only $31 million. And I saw that number, I thought, like, that just seems, look, I'm not a miner, but it just seemed way too good to be true. If you actually go to the table on page 3, we'll bring up a screen grab of it here, you'll see the 31 million of growth capex over FY25 and FY26. But then sort of just above that is a line called non-sustaining operational capital. And over the next 3 years, that totals $57 million. I'm not sure specifically what this is attributable to. I imagine it's, sort of peri-strip or establishing the underground.
Which is growth capital.
So I'm not sure like what the distinction is between what is growth capex and what is non-sustaining operational capex. But anyway, so it's not just going to cost $31 million is the takeaway. So really in FY25, based on my sort of back of the envelope maths on the guidance they put out, assuming they do the midpoint of production and cost guidance, which is 112,500 ounces at $2,400 sustaining, and say they produce that at spot 3,700, that's 146 million of operational cash flow. Then between this growth capex, exploration, and the non-sustaining operational capex, there's another 74 million that goes out the door in FY25, which then leaves roughly 72 million in cash flow after this capex and exploration. Then, of course, you've got tax and overhead, corporate overheads, etc. And they've currently got 44 million in cash and bullion in the bank now. So I guess the lesson is always read into the details. But in Catalyst's case, I think even when you do take this non-sustaining operational capex into account, it looks like they'll be making some pretty decent dosh at these current spot price levels anyway. And the market seems to like it. I mean, they're trading at 12-month highs and up something like 200% just this calendar year alone. So good luck to Catalyst on that one.
I'd love to see a big catalyst for them if they sold Henty.
I just feel like with all this going on at Platonic, why? Why do you need it?
It's just one of the words. They might. No one might want to buy it. I don't know, but it's like that'd simplify that business so much. Like you're not having to go over there all the time. Like I think it's a bit of hard work. I think they're making money there.
I think now they're starting to make money. But they've had it for how many years and how much hard work's gone into it to just sort of start making money now. So thinking like, geez, with what they've got going at Platonic, I mean, look, from an outsider's perspective, can you really be bothered? Like, I don't know.
Yeah, I don't think it'd be off the cards, so be watching that.
Yeah. Then moving on to De Grey's Beaver Creek Prezzo. So that's all happening at the moment in the US. So Ding Ding, I am a shareholder.
Or is it a da-ding?
Da-ding. It is a da-ding. So, look, nothing major to report here, but just a couple of small things I picked up reading their Beaver Creek Prezzo. I have to say, I've never actually seen this in a Prezzo before until now. They've actually flagged on their project approval slide the fact that they have no Section 10 applications at Hemi lodged to date. So that's definitely a first, at least for me.
That's good disclosure.
Good disclosure, very proactive disclosure. So
it's like an advertisement these days.
Yeah, it almost is. And it's not a great thing to have to see in Prezzos, but I wouldn't be surprised in light of sort of recent events that more mining companies might actually be putting this up front just to allay, make it very clear what the situation is. So I did sort of notice that in that slide there. But separately, seems like the also on that slide sort of talked about state and federal enviro approvals are sort of progressing as expected, with no material changes to the existing capital cost assumptions at this stage. So we'll keep an eye on that one. And then the other sort of small updates on the debt financing process. So they've mentioned that extensive legal, technical and financial DEs been completed now, and no red flags or sort of high project risks have been raised by the independent technical review that's been undertaken on behalf of the lenders. They previously flagged that their preferred lender group and structure will get selected next quarter following, once all the credit-approved term sheets and everything been reviewed, and final docs will get finalised in that quarter as well. I'm really interested to see what the mix of that $1 billion senior debt facility will be. So it's previously been announced that NAIF are going to provide $150 million. So there's another $850 to go there. I'm curious to see what banks might play in that. I mean, we saw in the Greatland deal this week, ANZ, HSBC and ING provided a $750 million Aussie non-binding letter of support. Whether there'll be any hedging requirements as part of that debt facility. Just super interested to see how that's sort of comprised and packaged together.
Be interested too, Ali. I'll be interested too.
Definitely.
And Astral, they've been on a tear.
That's one we were sort of talking about early in the week, which it was sort of a bit under the radar as far as what their share price has been doing. But they're up 60% in the last month. Look at the Spark chart here. Admittedly, and this is not just of, one or two trades. This is on sort of slightly higher volumes than average as well. They're now a $100 million market cap company. So for context, they're a WA gold developer out in the Kambalda region, close to sort of Goldfields, St Ives, and now Westgold's Higginsville Mill sort of territory. And I was trying to figure out what's actually happened in the last month that's may have caused them to go up this much. I looked at the gold price, Aussie dollar gold price. That's been pretty flat over the last month. I checked about a dozen other WA gold developers, and no one else is nearly up as much as them.
Mika?
No, but not even Mika, because they sort of come off after they raise their raise their money. But Antipa was next best, up about 40%, but that's a lot of that's largely to do with what's happened this week with the Greatland deal. Ausgold was up 23%, but most of the others are only up on average sort of in that 5-10% range. Nothing major has been announced by Astral in the last sort of month, other than a couple of sets of drill results, which, on face value looked, pretty decent at Camperman. But to warrant a plus 60% share price movement just seemed a lot. Camperman, for context, is part of their Fayetteville asset, which currently has about 116,000 ounces, which they're looking to do an updated MRE on that this quarter, which will be sort of some nice satellite feed for Mandela. But yeah, just really, really strange.
It's the biggest presentation, Ali. Everyone's just.
I think they're progressing towards a DFS, aren't they?
So they did a scoping study last year on Mandela. So I think they'll be going to some sort of a PFS or a DFS eventually, but it's not like that's coming out tomorrow or something like that. So just thought that was fascinating to see what.
I can think of a couple of reasons. It's probably just like people are kind of getting comfortable going down the developer risk curve again with the huge kind of raise for Mika, and people kind of looking around, and they're relatively speaking somewhat advanced, a simple mining method, like something that people can get more comfortable with. The other thing too is there's a new neighbour in the district in Westgold, which has been more acquisitive historically than.
And I think these guys, I think it'd be interesting to see if it's the PFS or DFS, I forget, sorry, but I think it's on a pretty skinny tenement and like that, I remember looking at the picture, it's like this big bloody long waste dump that constrained by the tenement size. But I think with the multiple pits there, they can sort of mine one first and then build a waste dump, then mine the next one, then chuck the waste in that pit. And I think there's probably a bit to see in the upcoming DFS. And then they got the options to whether they go to a Higginsville or a St. Ives and take the dirt there, or could be a standalone operation. And it's, I think their native title's progressing along there. So it just could be that. It's been around a while. It just could be that next potential bloody developer thing where a lot of these ones start getting a bit of the momentum. Attention.
So, it's like Mika, right? Nobody cared about it until everyone did.
No, and that might have been you just need a couple to get going effectively. Like Mika was, now that they've got a bit of a pathway, and I think it's just been that real delayed response from high gold price to developers starting to get into action, and could be the start of it now. So this is definitely one that could happen. So interesting to see what comes out. Oh, we haven't even talked about uranium. Oh, bloody big Putin last night saying, we're probably not going to export anything. Well, we might be reducing our exports out of Russia. Obviously, bloody mate, she was flying last night. Bloody all.
It wasn't just uranium, mate. He said, maybe we shouldn't export nickel. Maybe we shouldn't export titanium.
A few things.
Said some positive things about Kamala
pretty much
Harris.
every commodity.
Yeah, she's got a nice laugh or something like
in
that.
In his Russian way. Yeah, so, and I suppose the not exporting was probably expected to happen eventually on the back of US putting the sanctions on importing Russian uranium. So he's like, well, fuck you, while he has a shot of vodka. So, so that'll be – it sounded like Cameco was bloody – they were all flying last night, all green on screen, double-digit green on screen for the U stocks today on the ASX. So, mate – it's all bloody.
It's all ridiculous.
What a good day.
They don't send it one way. They just send it out the other side of the country. But it still ends up in the global market.
Yeah, I know. But what if
the same thing happened with oil? From the west, that side saying, we won't take it. It just goes out the other end.
Yeah, but we had some interim phenomenal prices in commodities for a brief period there in 2022.
It's true.
Who is also
wonder if they're going to export it to China or like. Does that include China?
Well, a bit of it's already happened, right, with the LME saying, we're not going to take any more of your nickel, aluminium, these sorts of things. That takes time to wind through and stuff, but it just starts going out the other way. They still need to sell it, They need the money. So,
who's also always green on screen? Axis mining technology.
Mate, it should change the logo from red to green. Red doesn't suit them because they're never going down. They're always going up.
Always up.
They're never hanging up. They're picking up.
Can kind of say the same for MMS, VRIFY, ADIA, DSI Underground, Silverstone, CRE Insurance, Greenland's Equipment, K-Drill, and use a spark chart.
I love it. You get your jaw clenched when you're doing this, JD. You're just pumped up about the sponsors. I love it.
Just read their names and I get excited.
They used to make
with
you
them right now.
Yeah, I know. We're going to have a beer. They used to make you cringe when we first had them, JD. Haven't you come along with a bit of cash? I love it. Hoodaroo, buddy morns.
Hoodaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.